Troy Resources is a profitable, dividend-paying gold producer with 2 operating mines in South America, Andorinhas in northern Brazil and the very low-cost Casposo gold and silver mine in Argentina, both wholly owned and operated by Troy. Andorinhas is a high-grade, narrow-vein underground mine. Gold ore is mined by mechanised cut and fill and handheld shrinkage stope mining methods. The ore, averaging over 5 grams per tonne gold, is processed through a standard carbon-in-leach circuit to produce a high-purity gold doré, which is flown to Sao Paulo for refining. Troy has been operating in Brazil since 2002. As the largest single employer in the region, it has a positive impact on the local and regional communities through the payment of taxes and royalties, direct and indirect employment, and the support of community programs. As part of the site's unique rehabilitation plan, Troy has already planted over 23,000 indigenous hardwood trees, including mahogany, grown in the company's own nursery. The objective of the program is to re-establish the native forest on land that had been cleared for farming last century. At the end of the mine life, Troy intends to donate the land to a recognised environmental organisation to be held in trust for future generations. Troy's Casposo mining operation is located in the San Juan province of Argentina, which has a strong mining industry. Although still to access the highest grades on the property, the mine is already low cost. In the first half of calendar 2012, Casposo produced 39,208 ounces of gold at a cash cost of just $396 per ounce net of silver credits. Troy acquired the Casposo Gold and Silver project in May 2009. A decision to develop the mine was made in August of the same year, and first gold was poured in November 2010. Initial capital to build the plant was just $45 million, almost half the capital cost estimate prepared by the previous owners. The plant is designed to treat 1,100 tonnes of high-grade ore per day. The material is crushed and then ground in a SAG mill. After leaching, the gold and silver bearing solution is passed to a Merrill-Crowe circuit, where the gold and silver precipitate is filtered for later smelting, producing a silver-rich doré. The doré, which contains about 92% silver and 7% gold, is transported to Toronto for refining. Open-cut mining commenced where mineralised veins outcropped on a small hill. To date, about 100 metres has been removed, and mining will continue until the pit is about 95 metres below its current level. Due to the geological prospectivity and large number of drill targets on the leases, the company is confident it will be mining long past the initial planned life of 6 years. A major mineralised structural corridor runs for 9 kilometres across the Troy leases. The current reserves and resources at Camilla, Mercado and Julieta cover less than 1 kilometre of the structure. The 5 kilometres between the Julieta resource and Mercado reserve, as well as 1.5 kilometres to the southeast of the Camilla pit, are masked by thin cover, which has resulted in no exploration over most of the corridor. Geophysical surveys were completed early in calendar 2012 and will assist in the prioritisation of drilling targets under cover. Since acquiring the property, Troy has had significant exploration success, increasing the contained gold equivalent ounces in the mineral reserve by over 50%. This includes the high-grade Camilla Southeast Inca 2 Zone discovery, which added an additional 113,000 gold equivalent ounces in measured and indicated categories at an average grade of 17.9 grams per tonne gold equivalent. In June 2012, the construction of a decline commenced, which will allow high-grade ore from the underground to be blended into the mill feed from early calendar 2013. Troy is confident there's good potential to identify further mineralisation along the structure, up to 1 kilometre to the southeast. 5 kilometres along the structure to the northwest of Mikado, the company has already identified the small Julietta resource. Drilling in 2011 delivered ore-grade intercepts. In addition to the main mineralised corridor, there are numerous outcropping veins with anomalous gold values. These will be tested over coming years as part of the ongoing exploration program. 23 kilometres to the north, within trucking distance of the processing plant, Troy is earning 100% interest in the Castano Nuevo and Don David joint ventures. Both of these properties contain similar low sulfidation epithermal veins that have had limited modern exploration with only shallow drilling and channel samples. Casposo is already a very low-cost mine that has lifted the company's production well over 100,000 ounces per annum. With the large number of exploration targets in very prospective geology, Troy Resources has increased its exploration budget to $15 million per annum. It expects to grow the reserve and resource base and be producing in the area into the next decade. Troy Resources, unlocking wealth, rewarding investors.